What's up, everybody? Welcome back to the High Performance Trader. Today, in this lesson, I want to break down May 24th, 2024. Right, this was a beautiful day and really highlights market structure and how we use it to get in and out of the market on a daily basis. Right, so guys, if you want to join the team, click the links below. If this video adds any value to you as a trader, right, make sure you hit a like and subscribe, right, because High Performance Trader is all about helping traders achieve consistency through becoming the absolute best versions of themselves, right? And in this video, I'm going to share what works for me. I'm going to share the principles, the precepts that I use each and every single day to get in and out of the market on a consistent basis, right? See, market structure is the way the market communicates to us, right? The market is constantly giving us information, right? It's telling us the condition she's in and where she's headed next. So our job as a day trader is to understand that language, understand the conditions of the market, and put on higher probability setups with low risk. That's our goal. That's our process. That's our system, right? It's not my goal to make money each and every single day. I don't even focus on the P&L. I focus on my ability, my competence to understand the market structure and the condition she's in. And we do that through market structure, moving averages, and critical levels, right? So let's break down the day. First thing I'm going to highlight, right, is my critical levels, right? Now, my critical levels are my pint numbers. That's end of day. That's previous day low. That's previous day high, right? And open print. Open print, we call her open print because she prints. And you're going to see why I say that in this lesson, right? So daily structure, right? Boom, right? Josh, why is this daily structure? So if you go over on a larger time frame, you're going to see 1 hour time frame. I do this each and every single day, right? So this was Thursday. This is the day we're talking about. So the way I talk about this with my clients, right, is I call it a 50-50 perspective. See, when you start to understand the market, you could really narrow it down to, hey, two things are going to happen today. Buyers are going to control the critical level and the price is going to go up, or sellers are going to control the critical level and price is going to go down. See, the market has millions of variables, and you can complicate it as much as you want. Or you can simplify the process and go, hey, listen, based on structure, there's a super high probability if sellers defend this level, 52760, that price is going to come down to previous day low, right? So let me put previous day low right there. Right, that's the lowest price from the previous day, and then end of days right there. That's the ending price. I don't got time to go into why we look at these levels. Right, check out my video on critical levels. But most importantly, these levels contain all the volume, so we must watch what goes on there. Right, so we have end of day, we have previous day low, we have previous day high, which is up here. Right, so now we have what I call a scenario. Right, there's a bullish or bearish scenario that's going to happen based off who controls this level. Right, so the bearish scenario is going to be sellers control this level. If sellers show strength here at 52760, I'm looking for a downside move to end of day to previous day low. Right, that's scenario number one. Scenario number two is buyers control this level, right, and then sellers get invalidated. See, this is a bearish chart pattern, right? This is a break and retest. Right? And this is why structure is so critical, so important, so effective, because based on what the chart pattern displays, we now have a better understanding of the market, which is why I call chart patterns and market structure the market's language. Right? She's going to communicate to us. She's going to tell us, hey guys, I'm either bearish or bullish today. That's it. That's all we have to figure out. Right? So based on this level, I'm going to be looking to put on either a long, targeting 52911, right? It's my first upside target. And then I'm going to show you where we got our next upside target, right? So once again, structure to structure, right? Market imbalance. Okay, so those are my levels, right? So now let's break into, the bell goes off, right? And now once again, remember guys, I'm looking for clues. I'm looking for understanding here to then take the market either long or short. And now for me to do this, right, I have to be able to understand who's in control of the market. This is where open print comes in. So open print is a super important level. Why? Look at the volume. The volume off the open is extensive, right? Every single day on opening bell, there's massive amounts of volume. Wherever there's volume means there's tons of liquidity. Wherever the liquidity is where large money's going to be. So if chart patterns display human behavior, I must watch the levels with the most volume. Open print's going to be one of them, right? So you can see here in the morning, buyers kind of show up, defend that 50, right? That's the 50 exponential moving average, right? And then you're going to notice I have this cloud on my chart. The cloud is literally the 9 EMA and the 20 EMA, right? So I have the 9D EMA, which is this blue line, right? Which I use to measure the strength of the trend that I'm in, right? And then I have the cloud, and then I have the 50 EMA. These are the moving averages I use, right? So now price comes through, starts to play around a little bit, and we had news at 9:45, right? PMI, manufacturing data was coming out, which was going to then add a lot more volume to the market. You can see we get it right here. So notice, we get some back and forth over here off open print, off the cloud, right? But my edge is not present yet, right? Because the edge I'm looking for is for someone to take control of the critical level, right? So you can see here, price sellers try to come in here, and then price rallies above the 50 and above open print. But the most important level that I'm looking at right now is that daily structure, right? Remember, that's the level that we identified on a 1 hour time frame. Whoever can control this level, I'm looking to trade with, right? So you're going to see here, price comes up, comes down, rips above the daily structure, which is 52760, and then starts to hold, right? So this is where we first took the market long, right? So what you're going to see here, and I'm pulling up my journal, right, is these were the contracts we took, right? So I bought 3 contracts right here for $101, right? You're going to see it's literally the same pattern, right? You're going to see shapes, right? And I'm just going to draw an arrow right here to really highlight where I took the market long and show you guys why. Okay, so this was our long entry. Right, you see price comes down, dips below that 50, comes up, and then consolidates above that level of structure, right? So one of the main reasons I took the market long here is because I wanted my stop to be below that level, right? Which means I wanted to stay in the trade until price broke that level. So if I take the market long up here, right, it's going to be around 528. And now my stop out's literally going to be 50, almost 60 cents away, right? I'm still okay with that, but I don't want to risk that much more than that, right? And I don't want to sit here and gather even more evidence of why buyers are here. I'm not trying to convince myself buyers are here. I'm just trying to play on my edge. I'm just trying to understand who's in control of this level, and then I'm more focused on risk. See, too many traders are so focused on finding that perfect trade, that perfect setup, gathering all that evidence, and then when the trade doesn't go their way, they wonder why they hold on to it. They wonder why they can't let go of it, right? So this is why I wanted to take the market long. I wanted to keep my stop. I wanted to keep my entry extremely close to that 52760 level, right? So I'd be able to account for a move down below it, maybe a fake out or a liquidity grab. Very important. And notice the cloud. Notice the 9 and the 20 EMA, right? This is a super effective edge. If anybody wants this indicator on their Thinkorswim chart, drop a comment below. I'll get you the link, and you'll be able to implement this because it has dramatically changed my trading. And what it does is help you understand trend. It helps you understand pullbacks, right? It's very effective. And more importantly, it helps you understand the strength, right? Because if I whip up my chart over here, you're going to see it gave me that extra confidence, that extra conviction to actually put the trade on long here, right? The cloud is green, right? The 9 is above the 20, right? And we're above the 50 EMA. This is why moving averages are so effective. Every trader I know, especially the ones that do extremely well, trade with moving averages. And the reason is the moving average is going to keep you on the right side of the market. The moving average is going to help you understand the relationship between price action and the trend. You must understand when it's extended, when it looks right, what I like to call when it's healthy, when it's unhealthy. See, you learn to understand how price is reacting to that moving average, you're always going to have a massive edge. Now you couple that with market structure, and you couple that with the critical level, and you couple that with a tight stop, guys, you cannot lose in this game, right? So this is where we first took the market long, just like you see over here in my journal. Took the market long right there on that second red candle, right? It's going to be right here. Now, there's a couple reasons why I did that. Nothing too crazy other than the fact that sellers could not push price below 52760, right? You're going to see we had 10 minutes right here of price just consolidating at open print, and more importantly, above that level of structure, right? Because let's bring it back to that 1 hour. And let's bring it back to the 50-50 perspective. See, if sellers defend this level, I'm looking for a move to end of day and previous day low. That's the highest probable move. Capturing the market imbalance from the daily structure to end of day to PDL. But, right, if buyers defend this level, remember guys, it's invalidating a massive bearish chart pattern, right? So if you have a chart pattern that's bearish and it gets invalidated, that usually means you're going to rally. And that's literally what happened, right? Because once again, if buyers aren't controlling it, or I'm sorry, if sellers aren't controlling it, that means buyers are. There's only two scenarios that can happen in this game. Buyers control it or sellers control it, right? So we have to learn to view market structure in that fashion, right? So you're going to see we got a really nice push off the cloud. And then this is where we first took profit, right? So we took a nice move all the way up to the top, right? And we locked in about a 20% return right here, right? That's my 1-to-1, right? Now, I don't have time to go into win profit ratios, right? But identify a ratio that works for you, one that you can focus on and execute daily, right? So I wanted to take the market long with 3 contracts, right? I wanted to lock in profits at my first target, right? And I'm going to tell you why, right? Because we rallied up. And then on the 1 hour time frame, you're going to see we were rallying right into the 50 EMA on the 1 hour time frame, right? Now, once again, I'm not just going to sell my whole position just because I'm introduced to a bearish retest on the 50, but I'm going to focus on locking in my equation. See, your equation is your way to consistency, right? See, until you identify your equation that gives you consistent results, meaning your win ratio, your profit ratio, how much money you need to make, how much money you need to lose, what you're comfortable with losing, what you're comfortable with winning, right? Until you learn to measure that, you're not going to get repeatable, systematic, consistent results. It's very important to do that, and that may be the reason why you're not getting the results you want right now, right? So we take our first profit right here, right? And then at that point, I'm like, okay, listen, I've locked in, and this is another reason why scaling out was so effective, right? I've already locked in my first 1-to-1, right? Boom, 20% return. I have a runner, right? Now my mind, right, is cleared up, because when you're in a trade and you haven't took profit yet, you're spending mental energy on a bunch of different scenarios. Oh, you're up 20%. You don't want to give 20% back, right? You're super focused on the losing trade, right? Or if you lose the money you've already made, right? This is a massive barrier for most traders. So learning to scale out is going to lock in profit. It's going to clear up a lot of mental space, a lot of mental fortitude, a lot of mental energy. And then you can use that energy for other scenarios in the market, right? So boom, take profit, lock it in. Now in my mind, I'm going, listen, what is my criteria to stay in this trade, right? And I'm not just going to go, oh, I'm going to leave a runner and walk away for the day. I'm going to go, okay, what sort of criteria do I need to see, right, to get out of this trade, right? And for me, that's breaking the cloud and breaking open print. See, open print, once again, look at that beautiful retest. We call it open print because she prints. Look at this. Price comes down, tags open print flawlessly. But look at these 2 red candles, right? You have to have a level of acceptance here. You have to be like, listen, I don't care if I give back some money. I don't care if I give back all the, well, this would have been break even for me, right? Because that's where our entry was. But you have to be okay with that, right? You have to let the market do her thing. Check out how price comes down into open print and the buying comes in extensively, ripping us up to our first target and then ripping us up to our second target, which was 52911. And then boom, price rips up past it, and then we end up taking profits for a 92% return on that last runner, right? So guys, the purpose of this lesson, once again, was to highlight market structure, was to highlight the 50-50 perspective, was to highlight how to use those moving averages. More importantly, how to identify high probability trades off critical levels. Hope you guys enjoyed it. Hit a like, subscribe for more content. And for anybody interested in joining our Discord, hit the links below. I'll see you in the next lesson.